A little bit over 20, about 22 ETFs in the defense sector. And that's just including the more pure play defense names. There's around 42 billion in assets and about 9 billion worth of net inflows just this year.
All right, joining me will be Simeon Hyman, Global Investment Strategist at ProShares, who currently offers 163 ETFs, about $100 billion in assets, including an ETF they rolled out back in February. That is easily, and I mean easily, the most successful new launch this year. And it's actually one of the most successful ETF launches ever in just over a month's time. Now, this might surprise you, but the ETF we're talking about is a money market ETF. The ProShares Genius Money Market ETF. The ticker symbol is IQMM. This is the first money market ETF designed to meet the requirements of the Genius Act, which that's the federal regulatory framework for stable coins. And so very simply, the way to think about this is the reserves that U.S. stablecoin issuers hold to back their stablecoins, those reserves must meet very specific criteria. And this ETF does that so it can be used for those stablecoin reserves. Now, as Simeon and I will discuss, if we put aside that stablecoin angle, a huge initial driver of the flows into this ETF, which I should have mentioned, this ETF is already at $22 billion in assets, $22 billion. But a huge driver is that ProShares is using this ETF for cash management purposes in some of their other funds. And so we are going to get into all of this. I think it's a really interesting story around, again, one of the biggest ETF launches ever. Now, to start this week, I'll be joined by Roxanna Islam, Head of Sector and Industry Research at VettaFi. And we're going to dive into a category that has really expanded over the past year or two, which is defense ETFs. So you can look at inflows, new launches, certainly performance, but this is a fast-growing category that itself has some very interesting stories tied to it. And so Roxanna and I are going to give you a nice little tour through the defense ETF category and some of the key drivers behind its success. As always, questions or comments, you can find me on X at Nate Geraci, or you can go to etfprime.com. So let me now welcome in VettaFi's Roxanna Islam. Roxanna, it was great seeing you in Vegas a couple of weeks ago at Exchange. I hope you've recovered, but welcome back to the podcast.
Yeah, thanks, Nate. I think I've just now recovered from Exchange. It's a great experience, lots of fun, but also very exhausting. But yeah, it's great to be here again, Nate. The defense category, I think, has been one of the more interesting categories, and I've written on it several times over the past few months because things just keep happening in the space.
Yeah, there's no question. This is a category that is certainly commanding greater attention from investors and also from ETF issuers. I mentioned the launches in the category. And to set the backdrop here, unfortunately, I think we all know the bigger picture story, which is pretty straightforward, and that we've had rising geopolitical tensions over the past several years. Of course, there are actual hot wars taking place with Russia and Ukraine, now with Iran. And so overall, there has been a much greater focus on defense and national security. Now, a lot we're going to get into here, but I thought let's first start with the defense ETF category in general. And I'd love to have you just offer a quick snapshot here in terms of the number of ETFs, assets, et cetera. And maybe you can just touch on this increased investor interest we're seeing.
Yeah, well, it's been a strong and growing category of the ETF industry. There's a little bit over 20, about 22 ETFs in the defense sector. And that's just including the more pure play defense names. There's around 42 billion in assets and about 9 billion worth of net inflows just this year. And what's really interesting to me is much of that growth has been relatively recent. It's been since 2025, so over the past year and a half. So if you look at the end of 2024, there were only about 13 or so of these ETFs with 14.5 billion assets. So very significant growth in less than a year and a half. And a lot of that has been what you mentioned. It is a very headline driven space. So anytime there is some sort of geopolitical conflict or tension, these defense stocks and therefore defense ETFs, they do get some more attention there. But there are definitely some long term trends in there as well. It's a space known for relatively stable growth, and much of that is because the industry's revenue is derived from these long term government contracts and spending commitments. So that can be attractive to investors who are looking for areas that aren't so sensitive to the economic cycle or consumer demand. And it offers a different type of equity story than technology or the communication sector, while still having some ties to tech and innovation, specifically through some of the more thematic areas like space or drones, which have been performing quite well and have contributed to some of the attention that the broader space is receiving.
Yeah, and to your last point, we'll get into that. That's part of the story that I do find interesting, just that you do have themes tied to space and the rise of drones. Basically, just the story evolving beyond the legacy defense companies that most people are familiar with. But I guess why don't we start with those legacy defense companies and ETFs and talk about traditional defense ETFs, the ones that have been around for a while now, where you have products like the iShares U.S. Aerospace and Defense ETF, ticker ITA. There's the Invesco Aerospace and Defense ETF, ticker PPA. State Street has an ETF here, First Trust. Do you want to touch on what investors will find if they look under the hood of these old guard types of defense ETFs? Because I think that'll help set the table for some of the specific thematic ETFs we're going to talk about.
Yeah, so pre 2025, most of the ETFs in the space were these original US defense ETFs, like the ones you've named. Invesco's PPA was actually the oldest. It was launched in October 2005, and now it has almost 8 billion in assets. The only one larger is iShares ITA, which has 13 billion in assets. And that one is just about 6 months newer than PPA. So it was launched in May 2006. So both, about 20 years old. Both have been around for a while, have gathered a considerable amount of assets, and they give investors exposure to those big established names involved in, aerospace and defense, like Lockheed Martin. Lockheed Martin, by the way, very interesting. I mentioned the long-term contracts earlier. If you look at Lockheed Martin, in the last year, they got 72% of their sales from the US government in 2025, including 63% from the Department of War. So that's just the scale of the government contracts that they have. And so that stock has been up 23% year to date. So very interesting. Other large companies include RTX, Boeing, Northrop Grumman. And if you look under the hood of both ITA and PPA, they actually appear pretty similar. But I would say ITA is more concentrated, especially on the top end, because PPA actually uses a methodology that reduces overweighting of diversified companies. So General Electric, for example, a defense company, but also a more diversified company, it's around 19% of ITA's weight, but only around 8% of PPA's weight. So some slight differences in there that contribute to performance, but all of these are still very popular ETFs with investors, despite there being, a ton of new launches in the space. PPA, for example, has seen over 600 million in inflows just year to date.
Okay, so those are the, again, old guard or traditional defense ETFs. As I continue looking through the category overall, I see a lot of more globally focused ETFs. So products such as the Global X Defense Tech ETF, SHIELD is a ticker, SHLD. You have the iShares Defense Industrials Active ETF, ticker IDEF. There's the Themes Transatlantic Defense ETF, ticker NATO, great ticker. Anything that you would highlight about these outside of the fact that you obviously get some international exposure or diversification that maybe you don't get in some of the old guard products?
Yeah, so I think this has been one of the biggest shifts in the space has been the move beyond the US. So if you look at all the new launches that have occurred since 2005, there's been about 9 of these, and 8 out of 9 of these are actually in the global or international space. So it's sort of where this industry has headed in terms of launches and investor demand. But it's been a huge shift, and it's telling us, that investors, they not only want that diversification beyond the U.S., as you mentioned, but they're also looking for growth in other areas, especially in Europe, where they're increasing their defense spending as they sort of play catch up to the U.S. As there's still a ton of geopolitical tension and economic competition in the air. I'd like to point out just a few of these that I think are interesting. So, Global X's Shield, which you mentioned, it was launched in late 2023. So this was sort of before that massive wave of new launches, and that has 8 billion in assets, which is actually more than Invesco's PPA. So it's the second largest ETF in the space after ITA. So very interesting there. It focuses on defense tech. So I would say it's a little bit more thematically tilted than some of the old guard ETFs that we talked about. So it's not just the traditional contractors. It has, cybersecurity, AI, drones. If you look under the hood at what names it holds, it's a lot of those familiar US names like Lockheed Martin, RTX, but then you add on some of the international names like Rheinmetall and Hanwha Aerospace. And then because it approaches the industry from a defense tech angle, one of its top holdings is actually Palantir, which is actually a technology stock. So it broadens a bit beyond that traditional industrial space that the old guard ETFs have. And for investors that want a little bit more of a targeted tilt, there's now several options in that space. EUAD was the original Europe specific option, and that was launched in 2024. And it has roughly 1.2 billion in assets right now. So not insignificant at all. This was actually a very popular fund in 2025. One of the best performing funds. It was up about 74% last year. There was also KDEF, which is a South Korea defense ETF. You can't really get much more specific than that. And it actually has 170 million in assets. And this was a newer fund that was launched a little over a year ago in February 2025. But by the end of 2025, the performance of that had over doubled actually. So it actually performs significantly well. And it's interesting because we hear a lot about South Korea, but it's typically that semiconductor tech story. So this takes it a little bit beyond that. And Wisdom Tree, they also released a suite of global defense ETFs last year. So one of them is a broad global defense ETF, WDGF, but then they got specific and they have a European defense fund, WDF, and an Asia defense fund, WDAF. So now we're at this point where we're seeing, the defense category get very specific, but we also have multiple options among those specific categories.
It's amazing because as I was going through, particularly these global ETFs, I was surprised by how many options are there. And there are a couple that we haven't even mentioned yet. And I have to note, by the way, the tickers around some of these ETFs are absolutely fantastic. So, for instance, there's the US Global Tech and Aerospace and Defense ETF. The ticker on that is WAR. There's also the TEMA International Defense Innovation ETF. The ticker's ARMY. I mentioned the NATO ETF, the Themes Transatlantic Defense ETF, some great tickers there. A couple other stats that I'll just piggyback on with some of the comments you made. Shield, you mentioned that being over 8 billion in assets. If I look, over 6 billion of that has come in just the past year. So again, I think really indicative of that growing investor interest there. If you look at EUAD, which again, that's the Select Stocks Europe Aerospace and Defense ETF, over 700 million has come into that ETF over the past year. And then I'll just note the Korea Defense Industry Index ETF. You mentioned KDEF. You noted it's doubled. I was looking this morning. It's up nearly 125% over the past year. Maybe we can touch on performance a bit later. But again, it just shows you that investor interest around global defense ETFs and that the performance has been there, which typically those things go hand in hand. Now that we've touched on defense ETFs just more broadly, let me ask you about a couple of the interesting subcategories we noted earlier. And I know you cover these very closely. The first one is around space technology. And so if you look at the new launches just this year, there's the Roundhill Space and Technology ETF, ticker Mars, again, another great ticker symbol that launched in early March. There's the Tuttle Capital UFO Disclosure ETF, ticker UFOD, that launched in early February. I saw just today, Tema, they launched the Space Innovators ETF, ticker NASA, continuing with the ticker symbols here. Do you want to talk more about this space theme and just some of the ETFs available here?
Yeah, so the space theme is very interesting because it does share some overlaps with defense, but I would say it's not part of the traditional defense category because they focus on the space economy, which is anything beyond the Earth's atmosphere. So you have things like launch systems, satellites, communications, Earth observation and GPS positioning, and the infrastructure that supports that. So there are several funds in this category. Many of those, over half of those, actually have launched in the past year. So this is also a space that's growing very recently. So I would say UFO is one of the more established funds in the space. It has 360 million in assets, and it's been up about 14% year to date. So not bad at all. And I'd like to point out it's very unique for a thematic ETF because it actually doesn't hold any Mag 7 names. I feel like, when you look at a lot of these thematic ETFs, you see a lot of the NVIDIAs and the Apples and the Alphabets, but none of that here. Top holdings actually include companies like Planet Labs, which is a satellite imagery company, and some more familiar names like Viasat. It offers high-speed satellite broadband services. And if you've ever got internet on a flight, you've probably seen the Viasat name on there. EchoStar, which has some recognizable subsidiaries like Boost Mobile, Dish Network, Sling TV. Those are all in the UFO ETF. So the Mars ETF, which you mentioned, is I would say the most comparable to UFO. It has very similar holdings. It is much newer, and it is an active ETF by the thematic manager Roundhill. So that one, it launched actually in early March, and I would consider it pure play along with UFO. But then there's also ARKX, which I think is interesting. That's the Arc Space and Defense Innovation ETF. Actually, that one recently changed its name and strategy in late 2025 to add defense innovation in addition to space, which is a little bit interesting because it shows sort of the merger of the two categories there.
And just to be clear, UFO, for people who are unfamiliar, that's the Procure Space ETF, which to your point has been around for a while. Let me ask you this. I mentioned that Tema Space Innovators ETF that launched today. And if you look at the press release, I was just reading this, it's going to hold an allocation to SpaceX through a special purpose vehicle. And of course, we do have this upcoming SpaceX IPO. Maybe this is obvious, but do you think that could be a catalyst for further driving interest around this category? Because obviously there's going to be a lot of hype around SpaceX itself, but it just seems like this could be really good timing for space-related ETFs as a category.
Yeah, for sure. I mean, SpaceX is probably, the most popular private company right now, not just in the space industry, but in the whole market. So, obviously I think it would be a major catalyst once we start seeing these added to ETFs. And there's been some significant news around that. People think it might happen sometime this summer. There's also some news that it might be added to the NASDAQ 100 soon after launch. Apparently, NASDAQ has approved some sort of fast entry rule that would let new public large cap companies join the index, less than a month after being listed. So it could have some huge implications from the space. And, we're already seeing some managers taking advantage of this, which is interesting. I mean, you mentioned one ticker, but, there's a few other tickers that aren't even space ETFs, and they hold some SpaceX just to try to get ahead of the curve. Obviously, I think one of the more popular ones is XOVR, which is ER Shares Public private crossover ETF. That one gets a lot of attention for its SpaceX holding, which has grown a lot over the past few months. They also hold that through a structured special purpose vehicle. And then you have other ETFs like CraneShares AGIX, I believe, also holds a small amount, and Ron Barron's new ETF, Ron B, also holds a portion of SpaceX. So very interesting in true ETF fashion. You have a lot of ETFs trying to sort of jump the curve and get ahead of the game and get that first mover advantage with their SpaceX holding.
Okay, so that's the space category. The other interesting subcategory of defense ETFs that we noted, or at least related to defense ETFs, your point, like with the space ETFs, not necessarily a defense subcategory, but a lot of crossover here. But that's drones, which again, Roxanne, I mean, these have featured prominently in both the Russia-Ukraine war and certainly the Iran war. It just seems like there are a lot of headlines around drone warfare every single day now. Just talk a little bit about this category.
Yeah, so this is a really exciting category, and I feel like it's just starting to gain mainstream popularity. It's actually been around for a while. Back when I was at my old firm and I covered electric vehicles, this was sort of part of that space. And it's interesting because it's not just defense applications, but there's also like logistics, smart city, even passenger drone tourism is a thing. But for ETFs, there are two unleveraged funds in the space. They were both launched late 2025, so relatively new funds, as are a lot of funds in this category. You do have drones, DRNZ, from Rex, and that is more of a pure play drone fund. So beyond defense, that also touches some of the other categories that I mentioned, like logistics, agriculture, infrastructure, and some of the more AI driven applications. If you look inside, it has a number of pure play drone names, like Ondas Holdings is one, Drone Shield is one that's also in its top holdings. And further down the list, you do have some of those more familiar defense names that we discussed, like Palantir, Lockheed Martin, Northrop Grumman. And then you also have Jedi, which is from Defiance. Similar in the sense that it holds some of these drone companies, but I think it takes a more modern warfare approach because it also includes other AI-driven warfare, defense, applications, cybersecurity, military robotics, things of that nature. So I would say that drones is a little bit more targeted to the drone industry, while Jedi is more diversified defense plus drones. But if you look at these in terms of size, they're smaller than a lot of the other funds we discussed, but they're growing in what is a pretty niche category. So both are just over 80 million in assets. So very early in the theme, but obviously it's something that I've seen is gaining attention with investors and advisors as some of this performance, as we see some of this performance go into 2026.
And another great ticker symbol with Jedi. I'm going to need to have VettaFi run a poll for the best defense ETF or subcategory ETF, best ticker symbol there with all these ones that we've gone through. Real quick before I let you go, you just mentioned performance, and we haven't really touched on performance around defense ETFs and any detail. I guess I'll just let you go wherever here. If you want to highlight a few specific ETFs, that's fine, or you can speak to performance more broadly. But in general, this is a category that has done very well overall. So what stands out to you regarding the performance of defense ETFs?
Yeah, so I mean, performance is obviously a big part of why investors have been paying attention to the space. So all this attention to space and drones hasn't really been unjustified. You're seeing it reflected in performance numbers. In 2025, I think a lot of these categories really impressed, and this is where they started gaining more attention. Some of these traditional funds like ITI in 2025 was up almost 50%. And then if you looked at the global offerings like Shield and EUAD, those were both up almost 75% last year. And I also mentioned KDEF earlier, which was up over 100% last year since its February launch. 2026 has been a bit of a different story. Earlier in the year, these names were showing a lot of strength. But then, in the past couple of weeks, they have been hit by this market pullback. There's not really many good places to hide right now in the market. So the returns don't look as dramatic as they did earlier in the year, but still relative to, the S&P 500 and the broader industrial sector, there's actually been some significant outperformance there. So, just a couple of numbers I'll throw out. Broad ETFs like PPA, that's been up around 2% year to date. ITA has been down around 2%, but it's been a little bit more resilient on the global side. Shield has been up around 5%, and KDEF, the Korean ETF, has been up around 17%. On the thematic side, UFO up 10%, drones up 5%. Doesn't sound too impressive, but if you think about the S&P 500 down around 7% and the broader industrial sector, which is up 1%, defense has held up relatively well in the market today. So, I'd say that, investors and advisors looking at this space should consider it more than just a geopolitical headline trade. There's a lot of things that can make a difference in the long run, like, the government spending contracts, modernization of warfare, and some of the increased spending we're seeing in some of these countries. And just the way this category has been able to broaden to some legitimate thematic spaces, I think, has been very significant.
No, well said. Though I will say I'm no geopolitical strategist, but if I had to guess, I think we're going to continue to see these rising tensions. We're going to continue to see the strife across the globe, unfortunately. And because of that, I think this entire category will continue to get looks from investors. But Roxanna, we'll have to leave it there. Again, interesting category in defense ETFs. I always enjoy hearing your perspective. Thank you for joining me.
Thank you, Nate.
That was Roxanna Islam, head of sector and industry research at VettaFi.
Looking for ETF options from one of the top asset managers in the industry? Visit i.fidelity.com/ETFs to explore Fidelity's lineup and more. Fidelity Distributors Company, LLC, 500 Salem Street, Smithfield, Rhode Island, 02917. Fidelity Investments is an independent company unaffiliated with VettaFi and other third parties on this podcast. There's no form of legal partnership, agency affiliation, or similar relationship between VettaFi, Fidelity Investments, and other third parties on this podcast, nor is such a relationship created or implied by the information herein. Fidelity Investments and/or Fidelity refers collectively to FMR LLC, a U.S. company, and its subsidiaries, including but not limited to Fidelity Management and Research Company LLC, FMR.
I'm now joined by Simeon Hyman, global investment strategist at ProShares, who just over a month ago, they launched the ProShares Genius Money Market ETF. The ticker symbol is IQMM, which, as I noted at the top, this is the first money market ETF designed to meet the requirements of the Genius Act, which of course is the stablecoin legislation. And so this would allow stablecoin issuers to hold IQMM as collateral to back their stablecoins. We'll get into all of the details of this with Simeon, who is joining me from New York. Simeon, welcome back to the podcast. It's always great to connect.
Thanks for having me.
Okay, so IQMM is easily the most successful ETF launch this year. It's actually one of the most successful ETF launches ever, already around $22 billion since it launched in the back half of February. And again, we'll talk more about what's been driving that. But first, I'd love to have you just talk about where this idea came from to launch a money market ETF that specifically meets the requirements of the Genius Act.
Well, you go back a couple of years and you had the 2A7 rules that facilitated the emergence of money market ETFs, just straight up money market ETFs. And that was an important evolution. As we all know, ETFs have been moving into just about any available space that used to be the domain of mutual funds. And then the Genius Act came in and defined the rules for what could count for stablecoin reserves, which are just a little bit, but meaningfully, if you will, more conservative than those for money markets. So the key distinctions are no agencies, and the maximum duration is just 93 days. That's shorter. You can have up to about almost a little over a year's duration in a regular money market. And so we saw that as an opportunity to launch the first ETF that would be compliant with that Genius Act so that the $250 billion stablecoin market could easily use it for reserves. And hey, even if you're not a stablecoin issuer, that more tightly defined set of holdings can be appealing to just about any either institutional or individual investor.
Okay, so if I were to just summarize that, you noted Rule 2A7, which that governs traditional money market funds. I think that's a provision of the Investment Company Act of 1940 that governs money market funds. And what you're saying is obviously IQMM meets those requirements, but if you look at the requirements of the Genius Act specifically, those are a bit more conservative than traditional money market funds. Do I have that correct?
You got it. Complies with the money market rules, but then goes a step further to comply with the Genius Act rules for stablecoin reserve usage.
And so, just for completeness here, if we look at what IQMM actually holds, I think most people will understand this based on what you just mentioned. But if investors look under the hood, what exactly will they find?
For all our ETFs, our holdings are up every single day, super transparent. It's one of the nice things about ETFs, and you will just see a list of treasuries. That's all you'll see.
All right. And before we talk more about how this ETF is being used and why it's already at $22 billion in assets, for people unfamiliar, do you want to explain how a money market ETF differs from a traditional money market mutual fund, just in terms of the investor experience? It's very similar overall, but there are, I know, some minor differences that investors should be aware of.
You've got the ETF wrapper, and that means, of course, that you're trading intraday. That's super important. Also, importantly, this is not true of all money market ETFs, but it's true of IQMM. You actually have weekly distributions. Mutual funds are monthly, so the weekly distribution is important. And in addition, there's another little piece of this that we added to IQMM, which is actually 2 NAVs per day and the possibility for same-day settlement for institutional users. So those are important pieces of the puzzle. But for even someone who is just buying it on their own account, the weekly distributions and the intraday tradability is a real distinguishing characteristics between our ETF and a mutual fund.
And just talk a little bit more about the NAV, the net asset value, because in an ETF, a money market ETF, this can move around a little bit. It's not going to maintain that stable $1 net asset value that traditional money market funds offer. Do you want to explain why that is?
That's correct. So the NAV does float. So the money market mutual funds can use accounting to keep it right to the dollar. But the movement here is really, really small because all you're owning is these treasuries with maximum maturity of 93 days. So you're talking about a penny here and there. There's really not a lot of movement in NAV, but it is important to note that it does float.
Okay, so let's now talk about the demand for IQMM. Again, this is getting a lot of attention. And my understanding is that initially a sizable chunk of the $22 billion in this ETF has been driven by ProShares using this for cash management purposes in other funds. Is that correct?
We are indeed using it for our own cash management purposes across our suite of ETFs. And look, we saw this as the most efficient solution, a lot more efficient and centralized than each of our ETFs, managing the money with instruments individually on their own. So this was an opportunity for efficiency and scale for the users of our ETFs. And for everybody's edification and important clarification, we absorb the management fees of IQMM in those ETFs, so there's no extra layer of fees for any of our ETF holders.
Yeah, very important point, and one that I actually had some questions around when this first launched. So I'm glad you clarified that, and I think investors need to understand that. I think, I always do like to cover the basics. Can you just explain what it means for another ProShares fund to use IQMM for cash management purposes? Like, why does that happen?
Almost any fund has to have some cash, whether it's just to facilitate trading and making sure that there's always a little bit of cash to facilitate trading or redemptions. But also importantly, at ProShares, we also use swaps and futures in a lot of our ETFs, and those require collateral to be posted against them. So there's a host of reasons that cash is in a range of our ETFs that needs to be managed, and IQMM does that in a very efficient manner.
Yeah, and that's really the key here, because if you look at what ProShares was doing previously for cash management, obviously you were operating efficiently, but by using IQMM, you can even take that efficiency to another level. Is that fair?
That's exactly why we adopted it for our own use.
Okay, and then talk about the potential interest from stablecoin issuers. Like, can you offer any insight into some of the conversations you're having here? Because again, this does meet the stringent requirements of the Genius Act. So talk about the potential demand from that side of the equation.
Yeah, the conversations are in flight. There's about $250 billion of stablecoin out there. And this is just a very easy solution for someone managing those reserves on the stablecoin side, because it's right on the ETF, a commitment to compliance with the Genius Act. Could you manage it in other ways? Sure, but then you gotta check. Oh, I bought this thing, I bought that thing. Am I in compliance today? Am I in compliance tomorrow? But if you use IQMM, you know the ETF is compliant with the Genius Act. One-stop shopping, very clean, very simple.
And to your point on being able to manage this in other ways, I think about some of the other ETFs on the market, say short duration treasury ETFs and those sorts of product. Theoretically, some of those could fit the criteria for the Genius Act. But obviously what you're saying is you can have complete certainty with IQMM that it's going to meet the requirements. That's a distinction.
It's super clean. It's super clean because you don't have to worry about managing that day to day and double checking what the holdings are because of the IQMM commitment to compliance with the Genius Act.
And talk more about the potential longer term opportunity here in terms of the stablecoin market. You mentioned that $250 billion figure, and I'm not asking for a specific number or anything like that, but maybe just offer some context on how big this market could be and how that might impact the demand for IQMM.
Well, none of us know how big that stablecoin market can be, but it's clear that the benefit of the Genius Act, everybody wanted you want that sweet spot of regulation but space for innovation. And in many regards, the Genius Act supplied that to facilitate the healthy growth of that market. So I think those rules set out can foster really nice growth of the stablecoin space over time.
All right. If we broaden out our conversation here a little bit, Simeon, obviously you're always staying on top of the markets. You're an investment strategist at heart, and I'm just curious whether you have any strong views regarding investors parking money in money market funds in general. And the way that I'll frame this for you is that it seems like many investors were expecting interest rates to come down a little bit, and they still might. But I think there's clearly some more uncertainty around this now with some of the inflation data that's coming out. And we know that rates obviously play into the demand for money market funds, and that if rates are coming down, maybe you have some money that moves out of money market funds and vice versa. So any thoughts on how investors might think about the role of money market funds in a portfolio right now?
There's two pieces to this. There's the sort of evergreen structure, and then there's the tactical piece. Yeah, when we came out of the great financial crisis, one of the things that we saw on the individual investor side was the beginning of the use of the language of liability matching that had been on the institutional side for a long, long time. Now, of course, this wasn't news to many advisors who had been building bond ladders for clients for decades. And what do I mean by that? Just thinking about your liabilities. If you've entered retirement or if you're not in retirement, you're going to have some cash needs over the next 3, 6, 12, 18, 24 months. And that stuff should be in super safe stuff. And by being in super safe stuff, that means not only limited risk from a risk asset standpoint, like credit risk or equity market risk, but it also means being a little bit insulated from interest rate risk. And that's what money markets are designed to do, to be super short-term stuff that's pretty darn close to cash. And you have that in an evergreen sense for the liabilities that you have in the near term so that you don't have to capitulate and sell stocks at the wrong time. That's old school evergreen portfolio management. And the other piece is tactical. Look, I'm an old school guy. I think about an investment policy statement. Nobody is a perfect market timer. So we all know what the history here is. After Gulf War and Gulf War I and II, the market was up within a year, 30% from the beginning of those conflicts, not the end. So capitulating and putting all your money in money markets is not necessarily a great plan. But what's the discipline of an investment policy statement says, hey, in that bond ladder thing, the liability thing, I have a baseline of 10% cash. but I'm anxious, so I'll allow that to be 20. And if I'm incredibly bullish, maybe I'll allow it to go down to 5. So to the extent that you do have that point of view that you want to mitigate some risk, you can have a little bit more. Again, not the entirety of your portfolio, but certainly the opportunity to grow that a little bit past your evergreen allocation. So those are the two key uses. And the really nice part about IQMM as a money market ETF is it's about the best you can do in terms of putting your cash to work. You don't want that. You don't want that in that checking account. You don't want it in that cash account at the bank around the corner. You want it to work in the maximum way possible. And money markets do that with limited risk.
Yeah, and a couple points that I'll make there, just to what you were saying. We can look this year and you see equity markets are down. If you look and go further out on the yield curve and look at some of the longer duration bond ETFs, those have taken a little bit of a hit. And so a good place to have been parked is at the front end of the curve or in a vehicle like money market funds. And so you do have that cash to put to work if you want. So you can look at it either tactically or as more of a core allocation, depending upon your views. To your point, just on IQMM being a good option here, certainly it's going to be a better option just leaving your money in the bank or in a generic cash sweep at a brokerage. How do you think about the due diligence if we look at other money market ETFs on the market or other money market mutual funds? In other words, if I'm an investor or an advisor and I'm looking at my different money market alternatives, what should be some considerations here? Does it come down to fees, the efficiency of the trading on the back end? Just what are some of the things that investors should consider?
You certainly should be familiar with the platform and the provider to make sure that they've been around a long time and have efficient back office operations and all that. But I think also that stacking of the attributes that we made sure were in IQMM should be on everybody's list of due diligence. So the adherence to the money market rules, the adherence to the Genius Act, which is even more conservative than the money market rules, the 2 NAVs a day, the possibility for same-day settlement for institutional folks, and the weekly distributions. That's a pretty darn good checklist. So most of the other players out there will check some of those boxes, not all, but that's a pretty good checklist of due diligence items.
Well, Simeon, excellent overview of IQMM. I have to tell you, I wasn't expecting to talk about a money market ETF as the most successful ETF launch so far this year and one of the most successful ETF launches ever, but here we are. So congratulations on the launch.
There's excitement to be had in all corners of financial markets.
Always, and especially in ETFs. But again, excellent overview. Thank you for joining me this week.
Thanks for having me.
That was Simeon Hyman, Global Investment Strategist at ProShares. That'll do it for this week's ETF Prime. Build your ETF expertise and separate yourself from your peers by registering for the ETF Institute Certified ETF Advisor Program. You can learn more at cetf.org. Next week, I'll be right back here with 2 more excellent guests, so certainly hope you'll join me for that. Until then, have a great week, everyone.
ETF Prime is hosted by Nate Geraci, president of OTR Media, LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. This program is for informational purposes only and does not constitute investment advice. Investing in ETFs involves risk, including possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Some guests appearing on this program may also be financial sponsors of ETF Prime. OTR Media and Nova Diaz are not affiliated with VettaFi or any of its affiliates. VettaFi's participation in this program should not be construed as an endorsement or an indication by VettaFi of the value of any OTR Media or Nova Diaz product or service. Visit etfprime.com for more information.